You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
All right, everybody. That music means we are back for a very special live edition of OPR, a.k.a. Options Playbook Radio, a.k.a. your go-to source for all things options offense, a little bit of defense, a little bit in between. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, ever-exciting Options Insider Radio Network. I want to thank all of you out there who helped to make 2022 the most insane year in the 16 plus. Yes, this January is our 16th anniversary from when we launched the network. So we could drive now. But this past year just blew the doors off anything we've ever seen before. I want to thank all of you folks out there who helped contribute to that, helped to keep driving our bandwidth bills up to record levels. It's a good problem to have out there. We love that so many folks are discovering OPR and indeed the full network these days. Remember, if you want to go above and beyond, you want more great content in your lives beyond just the nearly dozen or so shows that are coming at you all the time on the network. You want to go above and beyond, hit the pro, get live access to this, everything else that we do. Just did a great pro Q&A session a little bit earlier today with Mr. Scott Nations, as well as great options oddities at the end of the week and a whole bunch of other fun stuff. Giveaways. If you're active in the pro, you're going to have your name entered into the drawing to win the January Pro Trading Crate and a whole bunch more. TheOptionsInsider.com/pro is the place to go as we welcome on your usual host for this program, the options guy himself, Mr. Brian Overby from Ally Invest. Brian, welcome back to your own show, sir.
Well, it's great to be back, Mark. These are my favorite episodes, without a doubt, when we get the chance to huddle up and answer some listener questions.
It's time to huddle up and answer questions about your favorite options plays. Submit your questions via twitter.com/options, facebook.com/theoptionsinsider, or questions at theoptionsinsider.com.
All right, everyone, welcome to the Huddle, the portion of the show where Brian and I huddle up to answer a whole bunch of your questions, how many we can squeeze here into the show. And Brian, the folks are excited. I teased them earlier today. I said maybe, fingers crossed, no promises, but maybe I'll be able to get Brian live on the old air today. And sure enough, they are excited, Brian. We've got, who is that? Nichols in there saying, sweet live huddle with Brian. Option God saying, awesome. Welcome back to the live, Brian. So, Brian, the folks are excited to see you in the live again, sir.
Oh, stop. I'm blushing. I love it, too. I'm glad to be here, Mark. Glad to be here.
I guess your mom's floating around in there, too, a little bit. A lot of love coming your way out there.
I wouldn't doubt it.
Speaking of love, we always neglect to mention the folks who take the time to give us love over there on the on-demand side. Remember, if you do like what you hear, do keep rating and reviewing it on whatever platform you get it on. It really does help, clearly, there's a huge correlation between you guys taking the time to leave reviews and new folks discovering the show. Just like this 5-star review from Boat Log. I like that. Maybe that's Brian. That's your neck of the woods with boating and everything. He says, great podcast, perfect length, 15 to 20 minutes. If you want to learn about all the basics of options trading and the things to watch out for when trading any strategy, this is the podcast for you. So there you go, Brian. Getting love in the live. You're getting love on demand. It's good to be Mr. Overby these days.
Good old Mr. Boat Log. Yep, I've had a boat that has ran into a log before, so I know where he's coming from.
There we go. All right,
I don't know if that's where he was going with it.
Who knows?
I went there.
I'm thinking more like a captain's log kind of thing, but hey, to each their own. Your way could work too.
Probably.
Colliding with the log.
It doesn't work very well. Trust me, I've done it. It doesn't really work that well. So
I think
that's where we're at.
I probably would prefer the captain's log, I think. But hey, to each their own out there. Let's see what everyone has on their mind this week, Brian. We have a contentious question of the week. Just went live, actually, right before this show. We put it up late this week. We were debating on our previous show today, Options Bootcamp, what should be our question of the week. And we kind of settled on this zero DTE phenomenon. It's all over the place. The numbers are in for last year. It was a record year by just about every metric, including the zero DTE stuff, just blowing the doors off. But some people are a little hit and miss on this zero DTE. Some people think it's just gambling. They think it's just a fad, not going to be here long. So we thought, you know what? Let's put it to the ultimate arbiter, our audience. They are a savvy bunch. So we are asking them right now, Brian. This went live like an hour ago. We said the zero DTE trend exploded in 2022. Is this just a fad, or is this the wave of the future? So Brian, first, how do you fall on all this zero DTE madness? Is it a fad, or is it here to stay? And then what do you think our audience is voting for?
Well, I think it's here to stay. I don't know if I'm in love with it. I prefer that. I think we have enough expirations. I prefer the volume just kind of stays tight within the expirations that were out there to start with. But I think it's here to stay. If the volume is there, very rarely does the volume just dry up. So it'll be very important that they don't try to overdo it. But the big underlyings, that are trading with 1 day's remaining, they're right now in all of the underlyings that are the most popular over here at Ally Invest. So as long as they don't even if they do overdo it, they can always retract and go back. But I just very rarely see where you get volume like this. Like I still remember all the way back when the VIX came out. Not a lot of people thought that that the VIX index was going to make it just because it was such a different vehicle to be trading options on. But they got tons of volume right away, and guess what? It stuck. So the VIX is still around. I expect zero DTEs to still be around.
Well, if you're lukewarm on zero DTE, Brian, then you're in the wrong show today. We got a bunch of questions about these, so buckle up.
I'm okay. Yeah, I'm okay with it. I just don't know how much of a need there is for it, but I do enjoy it. I have to admit, but it's a trading vehicle, A
million contracts a day can't be wrong, right, sir?
Right. Yeah, if it's wrong, nobody else wants to be right.
Exactly. All right, let's go out to this one. Mac Top, interesting handle. Maybe he's got a Mac laptop, Brian. I don't know what he's going for here. But he says, is it worth it to sell puts in zero DTE options, or is there just not enough juice? We've had a lot of debate recently, Brian, about what the proper use case is for these zero DTE options. Should you be buying premium? Should you be selling premium? Should you be doing multi-leg spreads? So maybe let's start there. If you're using them, what is your preferred use case, or how would you prefer to see people approach these things? And then B, what do you have to say here for Mac Top wants to know, is it worth it to sell puts straight up, or is there just not enough juice?
I think I would prefer to be on the buy side of them just because of the gamma, the explosiveness of the option contracts. And obviously the selling puts really matters in the underlying. You're selling puts, gosh, I guess you'd be selling them naked. I don't think you're just trying to buy the stock. Well, let me backtrack just a little bit on this. If I were selling a put with 0 days to expiration on a stock that I wanted, that's an interesting thing because it is then just a limit order. And that would be more so on a cash secured basis where I really want to buy it. If I'm just speculating and I literally am just hoping to sell the put and it goes away, I would rather be on the buy side of things. And I don't mind buying a 0 days to expiration call or put based off of the fact, I just saw a breakout in the chart, something just happened, I want to stick around for a day and speculate on it. I'm okay with that because you know what you're getting. You know exactly how much time premium is going to come out of that option contract, because at the end of the day, it's not there anymore, right? It's gone. So they're very transparent, if you will. But when I'm selling the put, it really just comes down to what the underlying is and where the vol is at. But most of the time, selling a 0 DTE put would not have enough juice in the underlying to make it worth the while to just speculate on it.
Yeah, it's not my preferred way for people to go. I think if you're going to trade these things, you're right, Brian. They are just gamma bombs, right? That's what these things are.
Right. Yeah, gamma bomb's a great word. That's a great way.
They should probably revamp them as that. It might scare people away, but that's what they are. They're gamma bombs. So if you're just going to sell these things outright, you got to do something else against. You got to have a spread or something, and obviously that's going to take away all your juice. So it may not be worth it in and of itself. I like some of these other strategies. We were just talking about these on boot camp. I know Dan's a big fan now of not flies, but iron condors. He likes iron condors in these names, selling them. So selling the guts, buying the wings. Some folks have gotten into 0 DTE butterflies. Either way, you're going a very risk-mitigated, risk-limited approach, right? Because they are gamma bombs. They can explode, and you don't want to be caught holding the bag if that's the case. So whatever you're doing out here, who is that, Macked Up? Hopefully you're doing it in some risk-mitigated fashion. You're spreading off your risk or you're babysitting these trades very aggressively because they could easily go against you very quickly. So, yeah, I'm not a huge fan of just straight-up naked selling puts out here. But then again, there's a million contracts going up, so I'm sure there's more than a few things, or a few people, I should say, out there doing just that. Let's go out here to the mouthful of a handle. Bella Ruslan. Bella Ruslan says, why are there no same-day options for Apple and Ford? I'm thinking he means, Brian, the 0 DTE stuff we're talking about, because obviously there are those right now for Apple and Ford. It's just the weekly. So if you go out there every Friday, there's a weekly expiring in Apple and in Ford. So if you're trading on a Friday, all that stuff is the same thing as your 0 DTE and SPX. It's all popping off that day. So you can do that. And of course, expiration day, the third Friday of every month is going to get you that as well. So every Friday in all these single name equities, you are going to have that. The difference is a couple of things. We talked about this before. The major clearers, OCC out there, they're not really super gung-ho about taking the 0 DTE experiment phenomenon, call it what you will, and expanding it to single name equities right now for a variety of reasons. Single names pose many more risks than are posed by the large indices. They have takeover risk, M&A risk, special dividends, earnings, all kinds of things can happen in a single name that just don't happen in the S&P. So they're much more complicated from a risk modeling perspective. And also they're not cash settled. SPX is cash settled. So it makes it easy to net everything out at the end of the day. With single names, you can have shares flying back and forth. So that complicates things as well. So I'm guessing, Brian, we're not going to see these anytime soon, even though there is a lot of paper going up in these. So I have to imagine exchanges don't want to leave money on the table. They will try to experiment with this down the road. I don't know. Do you think we have to see a cash settled equity option first, Brian, before we could really see an explosion of single days, or is that just getting too crazy?
Yeah, I didn't even really think of it that way, Mark. But yeah, I guess that the cash settled would be big, and it would also be interesting to be able to trade cash settled single underlyings. Because I just really don't want it to happen. Right now Ford couldn't support it. See, that's just a great stock where the volume is good in Ford nowadays. It's in the headlines with the EVs and everything that's going on, and it's just a nice underlying to trade. And if you just get so many expirations and so many other different options, it's going to just butcher the options that normal traders want to trade all the time. So I just really would not vote for it. But I think you're right. I don't know why they would do it when you're transacting the stock all the time. It changes things up so much when the option's going to expire into 100 shares or short 100 shares, as opposed to a cash settled situation. Yeah, I don't mind the cash settle. I don't necessarily, but if you go on a totally different topic, I think I'd be much more interested in getting cash settled options on the underlyings. Now that hasn't been talked about as much as the very short-term expirations, but it always seems to come up at options industry council meetings every other year or so.
Imagine the confusion. Someone comes in, they sell a put on Apple. They think they're getting the stock, and then they just get cash. It's just, there will be a lot of confusion. But it's interesting. Sounds like, Brian, you're a little lukewarm on these zero DTEs, which leads nicely into our next question here from, who is this? VKM. VKM wants to know, what is Brian looking forward to or dreading? Dreading in this market. It sounds like, Brian, if I could read between the lines there, you're dreading the expansion of this zero DTE thing.
Yeah, it's just we took one huge step forward with volumes in the options marketplace, and I just don't want to see that just get ruined. I also think, like, we even look at, like, I'm looking at the forward option chain right now, and why do we need half point strikes? Why can't we just have single strikes? If you limit it, you're just going to get better markets overall, and it's going to be easier to trade. Now, Ford has the volume now to support it, but who knows when that volume starts to dry up, when they're just not, when the EV marketplace is established or something. I'm not 100% sure, but I just would like to see, to me, less is more when it comes to all these new fancy expirations and half point strikes and all this other stuff as far as options are concerned. I guess I'm too old school. But the volume's there, and that's one that you just got to love it. You got to embrace it. And markets are better than they ever have been in the years of option trading. I mean, I remember when I was way back in the day when I first started on an option trading desk, it was Charles Schwab way back when. No, I didn't even know what an iron condor was. Why? Because nobody did them. The bid-ask spreads were so wide and the commissions were so large that strategy nobody even considered. You just kind of laughed at it. I don't even remember studying it at all. But nowadays, that's a very common strategy. And, we just did one in the Options Playbook Radio just a week ago or so.
So that's what you're dreading. Anything you're looking forward to in the markets this year, sir?
Well, I think one of the things that I do like about just option trading right now is that the 20% level in the VIX is here to stay. It seems like that when I'd much rather be trading SPX options in particular with the VIX at 20% implied volatility than with the VIX down at 10. So I think that because of the volatility that is in the marketplace, I think it makes it I think it's part of the reason that's driving some of this volume. It makes trading these option contracts so much more interesting to be in a little bit higher volatile. You don't want to get too high. I don't want to see the VIX up around 30, 40, but I also I'd rather be on the higher end than on the lower end when it comes to volatility in the marketplace. So I do foresee more and more people coming into the options marketplace than before. And as a matter of fact, there's we have a couple of registered investment advisors that do a lot of covered call selling. And you look at a lot of those indexes is it BXM or BMX? What is the one that tracks covered call selling in the SPX? Those indexes have done really well relative to the actual S&P 500 index, and it's drawing a lot of attention to that strategy, just waiting for the markets to come back, in particular covered call selling.
All right, let's keep rolling. Let's keep it on the optimistic trend. Let's go out to Wolfie's. Wolfie says, what does Brian think the hot options strategy will be for 2023? So, Brian, we had the meme stock palooza back in 2021. I don't know what the hell you could say. I guess maybe last year was the year of zero DTE. It really did seem to take the world by storm. What's the hot thing going to be this year, Brian?
Oh my gosh. What is the hot strategy? Well, I guess I would go with the zero DTEs, and that has brought to the forefront things like butterflies. That strategy is interesting on a zero DTE basis. And I know that a lot of the analysts, besides me, that are on Options Insider Radio talk a little bit about those type of strategies. I guess the meme stocks are trying to live. and it's kind of sad, but they're back in the swing of things. Kind of oddly enough, if you would have stuck with the meme stocks, you probably did better than if you just bought the S&P 500 index. If you bought an index of meme stocks, they bounced back enough that they're kind of interesting this year too. So the big question will be tech. When do you want, what is the right multiple to jump back into the FANGs? I think that will be a big question. A lot of people will be talking about it. We're seeing some of the layoffs that are coming in the markets, but I do think that people are going to start dipping their toes in the water on that side of the marketplace, even though they're still at high valuations. But they are definitely better than they were prior to the pandemic as far as valuations are concerned.
All right, let's keep on rolling here. Let's go back to the straightforward strategic side, Brian. Let's go out to MJ10. He or she wants to know, how far out in time does Brian prefer to go when he's selling a put in a single name stock as a way to buy the stock at a lower level? Thanks, and loving the show. So, Brian, you're looking at, you were talking about Delta, I know earlier, or other names. You're looking at one of these names, and you want to just go out and sell a put to buy the stock at a lower level. How far out in time do you typically want to go?
Well, because of the way the question is worded, there isn't a particular time. There might be a particular event or that is going on. But if I'm legitly selling the put to try to buy the stock, I do not mind doing it on a one-day basis. And I think we actually mentioned that on one of the first questions at the top of the show. But normally I would probably go out 1 to 2 weeks, because if I go out further than that, when I'm trying to buy the stock, what do you do if the stock runs away from you? And I'd prefer to be a little bit more short term when I'm trying to buy it than the longer term situation. For example, I did an iron condor recently. I just already mentioned it once in the show, and we went out 30 days. And in an iron condor, you're selling a put spread and you're selling a credit spread. And I like going out further in time in that situation, because then I can adjust it. Because if the market goes against me on either side of it, I can make an adjustment. Why? Because I have plenty of time still left in the option contracts, and that is possible. If I'm looking at it on the put side and I'm trying to buy the stock, I don't want to necessarily adjust it, right? I either want to buy the stock or not. So if I'm in a shorter term option contract, that gives me that opportunity. It didn't happen. Okay, let's go out and sell another put and try to buy the stock again. So I don't mind them for 0 DTEs. I wouldn't mind that situation if it was a single stock name, which we just mentioned doesn't really happen. But I don't mind weeklies. I don't mind. I don't think I'd want to go out much more in 14 days because of everything that I mentioned. So shorter, I think, is better if you can get the premium that you want and you're willing to sell that premium to try to buy that stock at that strike.
Shorter is always good. You can always live to fight again and do it again, right, Brian? Rinse and repeat.
Yeah. And that's the concept on selling the puts. I've been burned, before, thinking I was going to get the stock, and it didn't get put to you. And so, that's where I'm at. Shorter, I think, is sweeter when it comes to cash secured put selling.
Yeah, there's people who go out and try to set it and forget it for a year selling puts. I've never been down with any of that stuff, Brian.
Yeah, it just goes so far against you. And then what do? Do you roll? Do you not? Do you buy it back? And people don't like to buy them back.
No, they never buy them back. They never want to do that.
So,
well, Brian, that music means we've come to the end of another great live huddle. Thanks for joining us. The folks had a good time. I had a good time whenever you join us live. It's always a fun time here on the network. And before we go, Brian, if the folks listening live, listening after the fact, they want to check out everything else you got cooking over there at Ally, where should they go? What should they do?
Well, the easiest thing to do is to follow me on Twitter. My handle is very simple. It is at my name, at Brian Overby. So please follow me on Twitter. Give us, as many thumbs up as you can out there. And till the next time, may all the options you bought finish in the money and all the ones you've sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.